A super investor cheat code is then just raising money to buy your real estate, one of the only asset classes in which you can do that. But you need to make sure that every single month in your personal life, you have savings left over. You don't want to operate your business in the deficit. You don't want to be spending more every month than you are bringing in. All right, so what's up, everyone? Michael Manaskainen here. I've gone from zero to $2 million of real estate in my first 2.5 years. And the last 2.5 years, I've gone from $2 million to $22 million. And what I'm trying to do is just share and help you guys out on your journey. If you're not familiar with me, I have an absolutely free community called Wealth Through Real Estate. You should see the link below this video, but it's a community for those that are looking to actually become financially free and achieve wealth through real estate. Pretty straightforward. And for this month, I am pretty much breaking down some of the core concepts on my journey to financial freedom and giving you insights into my paid mastermind community, Super Investors. So I'm just trying to share stuff that can hopefully help you out on your journey. So with that being said, we're focusing the next couple trainings on financial freedom. And very simply, what financial freedom means, people have tons of definitions for it, but the most simplest way to think about financial freedom is you are generating more passive income than you are spending every month. When you are making more money passively from your assets than you are spending every single month, then you are financially free. I shared in the last couple of videos my exact journey to financial freedom, my drive, what got me to start so young, and what my journey looked like, and then what my actual real estate journey has looked like those first 2.5 years versus the last 2.5 years. And with all that, I want to help you get started on your journey and talk about some of the more foundational stuff that allowed me to actually hit my goals. And one of those is I have been very adamant about leveraging data on my journey to financial freedom. And what does that mean? Well, it means understanding, like having a budget, keeping track of my expenses as well as my income, and road mapping out my journey to financial freedom. Basically, I know how many properties will I need? How many will I need by the time I want to be financially free? How many properties does that mean I'll need to acquire each year to get there? That was a very big part of my journey. And I think people overcomplicate it because they don't even start with the foundation, which the foundation is your income minus your expenses is what you have saved. What you have saved in theory is what you can invest. Unless you start raising money to buy your real estate deals, all you can do is use the money, your income minus your expenses, so your savings, use that to then invest. A lot of people take that money and they invest in retirement accounts, 401ks, IRAs, just stocks in general, passive index funds. All that is solid. And I think the majority of people should do that. You watching this right now, I don't think you're the majority of people because the majority of people are not spending time getting educated in different asset classes like real estate. I already think you are above the majority on your financial freedom journey. If you aren't already, now you have to take action to then generate those assets that will kick off passive income for you. So for the majority, let them invest in stocks. I mean, I still invest in stocks. It's not that I don't. It's just it's not my main path to financial freedom. It's just a part of my overall asset allocation, right? I invest in that and real estate and crypto and this and all these various things. But the majority of my time and effort in all of my financial freedom has come through real estate. But when you're starting out, even early in your journey, you need to understand your personal finances. Once again, you need to understand two very simple things, and then everything else comes from that. You need to understand your income. How much money are you making every month? You need to understand your expenses. How much money are you spending every single month? Take it one step further. When you look at your expenses, where is the money being spent? Is it on like your needs? Are you spending money on things like your housing, healthcare, your vehicle, food, utilities for your home? Are you spending a ton of money eating out? Are you spending a ton of money going out drinking, just events, whatever? You need to balance enjoyment in your life with actually like working towards this financially free life that you want. I'm not saying forego the coffee and the lunch and this and that, but understand how much income you have, how much you are spending each month, and is that reflecting kind of what your overall savings goal is. So understand your income, understand your expenses, categorize your expenses, and then your income minus your expenses are your savings, and that is the amount that you have to be able to invest, right? The cheat code, a super investor cheat code, is then just raising money to buy your real estate, one of the only asset classes in which you can do that. But you need to make sure that every single month in your personal life, you have savings left over. You don't want to operate your business in the deficit. You don't want to be spending more every month than you are bringing in. And that's where a lot of people go wrong financially. They bury themselves into massive debt, credit card debt primarily. There's like student loan debts and even vehicle debts and all that, but those interest rates tend to be much lower. Some of you have some pretty bad credit, so your card debts are pretty high, but it's those credit card debts that really screw people. And compound interest is one of those things that can massively accelerate your journey to financial freedom, right? Your return on your investments. Typically, people are going 8 to 15% return on investment. Well, it also works in the exact opposite way. Your expenses on debt, like credit card debt, is 20, 30%. That is literally 2, 3, 4 times what you can expect in the positive direction. You're going down in the negative direction. And it compounds the same way it compounds in the positive way, it compounds in the negative way. And that's where people get stuck, is in those debt, I guess, spirals. I don't know. So to prevent that, if you're not already in that, is understand your income needs to exceed your expenses. Don't get into debt. I'm not saying don't use credit cards. I'm not Dave Ramsey. I use lots of credit cards. I just pay them off like they're a debit card at the end of each month. I only spend money that I have. And then when I spend that money, I know I have a plan in place to pay it off. Once again, I'm not talking about real estate debt. I'm not talking about even student loan debt for the right situations, for the right education that you're focused on. What I am talking about is consumer debt, things that you really don't need to be spending money on, or things that you do not need to be getting in debt for, things that you do want, but you should save for those things, or buy yourself some awesome assets that then pays for all that, right? So to minimize going in the wrong direction of compounding interest, you want to avoid debts. You want to avoid these really high interest consumer debts. Leverage debt to buy great assets that pay you passive income, but don't have it impact your entire financial freedom journey. So with that, between your income and your expenses, you just subtract the two, and that's how you get your savings. And then you can also do this as a ratio, a percentage. Your savings divided by your income is your savings rate, right? It's a percentage. How much of your income every month are you saving? I think a lot of people say if you can get to the 5 to 20% range, that's solid for the majority. My wife and I, because we were both working, we were basically living off one income and then saving the entirety of the other. But that's because we chose to live more frugally. We didn't have kids at the time. You may or may not be able to do that, right? It's ultimately up to you, but it's key to understand these metrics. You don't keep track of this necessarily to compare to other people or anything like that. You keep track of it to compare to yourself, and then to make sure that it's in alignment with what you want to accomplish. I know a lot of this sounds confusing. That's why I created an absolutely free budget and net worth and financial freedom tracker for you. You can download a free copy at Wealth the Real Estate. Here's the link if you want to grab it. Like I said, it's more than likely in the description. Go grab it. There's a whole training on how to do all this stuff. I could even screen share it in one of these upcoming days. But the key pillar for today is income minus expenses are your savings. Make sure that your savings are positive, and then start auditing your expenses and make sure they are in alignment with what you want to be spending your money on. A lot of us get stuck wasting money, spending money on things that don't really make a difference for us, but we're just used to it. When you start taking control of your finances, when you start taking control of everything, your life becomes much more straightforward and simpler because you actually have a clear understanding of what's going on. And that's the biggest piece here. That's why you track your net worth. That's why you maintain a budget. It's also really imperative because if your goal is financial freedom, once again, is your passive income from your investments are exceeding your expenses. You have more income passively coming in than what you are spending each month. Well, if you don't know how much you're spending each month, then how will you ever know if you're actually financially free, right? This is really important on your journey when it's time to say, do we have enough to be financially free? And just because you have enough does not mean you need to stop. I had enough a couple of years ago. Even with a $2 million portfolio, just a handful of properties, I had more money coming in every single month than I was spending. However, that was not where I wanted to be for the rest of my life. I wanted to continue increasing my income and my expenses as we were going to grow our family and all these things. I knew I would need more. So I grew my portfolio in the last 2.5 years to over 20 million. That kicks off way more passive income, way more cash flow through that real estate. Plus, I got the stocks working in the background. I'm lending some money. I got crypto, all that other stuff. But it's really real estate that has allowed me to make this passive income, this cash flow that offsets all of my expenses and then some. And then some of the things I'll be sharing over this next week, the 4 levels of financial freedom, just real quickly. Level 1 is when your passive income exceeds your needs, your housing, your healthcare, your food. Then it's your needs and your wants, right? I call that level 2 financial freedom, where it's now you're including money for travel and just all these other fun things that you want to be spending on because you literally have one life. This is what I hate about like the stock market perspective, like the people who invest solely in the stock market. They basically save, the goal is save like 50% of your income, spend no money at all for 30 to 40 years to have $2 million in, invested. So then you can live off $40,000 for the rest of your life. It's like, what the hell? So you miss out a lot of your life to live a life that you don't actually really enjoy as much because you're living extremely frugally. Where I always thought I'd rather retire sooner and I would rather retire with more money, right? I don't want to live with less money. I want to live with more money and enjoy more of my life because I'm going to have more time. So why wouldn't I want to spend more time traveling, more time eating out, more time having fun, as opposed to just sitting in my room and eating lentils and watching TV? Yeah, it's cheap and you're free, but like, what is that the lifestyle that you want? I don't think so. I'm not telling you to go spend hundreds of thousands of dollars or whatever, have this crazy lifestyle. It just depends on what you actually want to have, which is why tracking your expenses is so important, right? It plays into this. And for me, I determined I was financially free truly, not when my needs were covered, not when my needs and wants were covered, but level 3, when I had 2 times my needs and wants, right? I call that level 3 financial freedom. That is the FU money. That is the quit the job. That is when I felt more than comfortable completely leaving the workforce and not having to look back, because worst case scenario, let's say things don't go as well as they could have, I could always regress to my previous lifestyle, right? Because I'm 2 times the passive income than what I'm actually spending or what I'm used to spending. So, okay, maybe I pull back on some wants for a little bit. That's okay. And then I have this level 4, which is where I feel like a lot of people's mind is at. I want $100,000 a month of passive income. I want $1 million a month of passive income. I love that for you. And I want that for you. But if you solely wait until you're at level 4, it'd be very hard for you to simultaneously maintain a full-time job and build your way to financial, or like continue scaling to $100,000 a month of income. So like $1.2 million. If it's through real estate, you're fortunate because it's tax-free. $1.2 million. I call that aspirational, generational legacy. That's like that legacy level. We all want, or not we all, actually, a lot of us don't care to get there. You don't want to work as long or as hard as it would take or have as big of a team or operations to get there. And I get that. I'm also not certain that I need $100 million in assets or, $100,000+ a month of cash flow. Doesn't mean the steps won't get you there. It just means you have to scale and continue doing this for a longer period of time. It's just, I think people are more focused on this generational wealth, when in reality, what you need to do is understand your expenses and then recreate that through passive income streams. For me, real estate investing. And for me, because I'm not using my savings, I'm raising money to buy these deals, I got there even faster. Incredible. That's all things that we'll continue talking about throughout this month. But one thing I want you to understand is your expenses. And then we'll talk more about net worth so you can track kind of what is your overall progress in your financial freedom journey. It's actually distinct because your net worth is actually meaningless when it comes to financial freedom. It matters more so for like stock investing, but for real estate, you can have extremely low net worth and have very high cash flow. And that's honestly better. If you had to choose between high net worth or equity or high cash flow, almost everyone, in my opinion, should choose high cash flow. You focus on equity and net worth when you're building your wealth, right? And that's the benefit of real estate. You get both the cash flow and the net worth or ownership benefits, appreciation, debt pay down, all of that good stuff. But if you had to choose, cash flow is way more important than equity if you're trying to be financially free, because cash flow is the income you have coming in, the profits you have coming in, that's going to cover your expenses. You can have $2 million of equity sitting there. Unless you're willing to sell that thing or refinance and pull money out, you're not actually tapping into that at all. It's just sitting there growing, which is great. That's where wealth is being built. However, it's that cash flow, that monthly income from your properties That's what covers your expenses. So that's why it's important to understand your income and your expenses, to understand your net worth, to see what your wealth journey is looking like, how it's building. It should almost always be positive. There should be very rarely ever be a scenario in which it's negative. Obviously, if you're very invested in stocks, you know how that goes. It goes up and down and left and right. It's actually insane how volatile it is. And when you have a little bit of money invested, 5-10% change isn't that huge. But when you have a million plus, that volatility is very real. Losing out $50,000, $100,000 like that on paper, that's very real. For me, I'm a long-term investor. I know, just keep buying more when things go down, whatever. And then the most important part is actually putting all of that together and getting you the actual progress to financial freedom. So with that being said, I will see you guys for the next one. We're going to dive deeper into budgeting and expenses in the next one. I really want to go through needs and wants, but just see how that plays a massive role into your progress to financial freedom and how all the parts play together, especially leveraging the spreadsheet.